Hello everyone. Hello, and welcome to the PivotBoss Premium Trading Room. Welcome to the monthly outlook for June 2017. Today is June 1st. First trading day of the month under our belts here, and we're going to use today's session to kind of look at a few stocks that we talked about last month in our May monthly outlook, and then we're also going to look at some new potential opportunities for the upcoming month in addition to some futures charts. If you all have any suggestions or anything you want me to cover, feel free to throw out a symbol and we'll take a look. But for the most part, wanted to go ahead and get started with a quick sound check and just make sure that you can hear me. If you can hear me, please say yes or hello in the chat. Should be able to hear now, and everything should be up and running. All right, good to see you. I wanted to start off with Tesla really quickly because this was one that we talked about last month on May 1st. So right here on May 1st, this is when we talked about last month in our monthly outlook. And what we talked about at the time was, I said there might be a little bit more upside, and then you may see a counter trend move coming. And in that counter trend move, I wouldn't necessarily sell it, but I would look to buy it. I said it would be a home run buy off of 290 for a shot at seeing a move into 332 and then a continuation into 397. And so far, this has played out very, very nicely. Price did go a teeny bit higher the next session and then drop right into the 290s, getting into 290.76 as a low, and then proceeded higher right away. Needed to come back a little bit more before it finally broke to the upside. So this one has rallied 50 plus handles off of the 290s and continues to push to new highs. The reason that we were so bullish this opportunity was because of the LVN in the chart. It was a great LVN. It was market structure. So if you look at this LVN right here, it comes right off of the high of this key range. We got a big nice push through that level. So this move had a lot of great spacing and distance into the LVN. Bulls that got paid on the way up were able to come back in and defend off that zone. And it's just been a nice continuation. And now you're seeing price push through the 330s and create a similar LVN here with this initial push higher. So right now, this one continues to be quite bullish. We mentioned before that 390 here, or 290 could open up a move into 390. And we have 397 as the next upside target based off of a larger key range right now, which I have actually removed at the moment. But much more upside could be ahead. Now, short term, any rotation into 330 on a short term basis may be an opportunity to push this thing into the upper zone. Right here, basically, you'd be taking it into this ADR target zone between 63 and 72 on a first little move basis. If there was a rotation back into 290, again, I still believe bulls would be looking to come in and defend at that area until proven otherwise. Failure to hold that zone would rotate back toward 240. So this was a really nice opportunity that played out great last time. Shopify was another one here that we've been focusing on in the trading room time and again. It's been a great bullish trending structure. Price has been pulling back and rotating into the trigger zone of the stacked and sloped PIMAs. That's offered buy opportunity after buy opportunity. This right here was May 1st, and I mentioned that we have a great structure. This could be a buying opportunity for a rotation up, and but I did mention be careful of the earnings report the next day. That's it. Once you get out of the earnings report, it should be buy the pullbacks for a continuation higher. And that's exactly how this played out. So last time we were right here. This thing gaps up after earnings, fills the gap, range retest, entry, and a continuation. Another push here is also bought. So this one's been quite bullish. And absolutely right now, it still looks great. Here's the midpoint, or rather the LVN that continues to hold. This right here, stacked and sloped, still in effect. And prices have been holding at these highs. It could see another squeeze. So this one could see another squeeze ahead. It has remained bullish, but last time off that idea, it worked out great. We also had NVDA on the board last time. NVDA. And this one's been very, very bullish. Their product is really good for the current economy, what we have right now. We were, let's see, 5-1 was here when we talked about it. And what I mentioned about this one at the time was this key range was, and I think this direct quote was, super energy building. Basically, we had this impulse move right here, and it came back to the midpoint. And then from there, most of the trading occurred in the middle 50% of that range. And that's between that 25% level and this 25% level. That's the middle 50% of the outer range. And when price coils and trades for this long between that area, it's building energy. And I mentioned that this could happen, or this, one of those is going to happen. But based off the overall uptrending structure, the expectation was for a push higher. And so I believe the targets that I provided were 136 and 152. And so 136 was hit already. We got a gap up the next week, and that was based off of earnings, and we hit 136s right away. We pushed through it, and now making 136s support, and now we're headed to the next target, 152s. So since last time, this was May 1st, we've seen this thing go straight to that 136 target with 152 still ahead. So this one still looks quite bullish. Rotations anywhere into 120, even if this thing were to have a huge 1 or 2 day pullback into 120, still an opportunity for bulls to defend until it stops holding. So as soon as that area stops holding, you may see a rotation back against the range toward 90, but right now, very bullish in NVIDIA. We also had WIN was very nice as well for us. This is one where we were updating our analysis. We talked about this being the time when we talked about in our trading room for a shot at breaking out and continuing. And the target I gave at the time was 136.51. And there it is if you zoom out of the chart, 136.51. We're getting very close to reaching that now. Today was the highest we've gotten toward that target. May 1st was right here. So it really hasn't gone much in the way throughout the month, but recently it's driven higher. The one thing I did mention, though, with regards to WIN was buy all pullbacks into 136.51. And that was May 1st. The first pullback comes into the trigger zone. There's a new high that it failed, comes back into the trigger zone, and then that one's on its way. So both pullbacks led to new highs. One was rejected. The other one eventually pushed within 20, 25 ticks of that target. So very nice continuation out of WIN as well. So we had some pretty decent stocks that played out great according to our analysis. And that last time, I have a list here that we'll be kind of pushing through in a moment. But first, I wanted to look at some futures and get an idea of what we might see this month. This chart right here is the ES, the S&P 500, E-mini S&P 500 futures. And what I mentioned last time, May 1st, which was right here, that day, was that we might see any weakness, basically. Actually, this is May 1st. So this is May 1st. Any weakness into 2400 could bring this thing back to 53s and 48s I mentioned. And that's something that we followed until we had that day that had that 10 handle sell off, and then absorption off 2400 led to that move. So I mentioned that could be the case, but then any pullback this way, even as deep as the 2320s, could be a great buying opportunity for a push to new highs. And last month, I mentioned that the target in that case would be 2424. We hit that target today. So on the last trading day of the month, we hit that target after the pullback. And that was only the first major target, 2424 quarter. The next major target above is 2459.75. So we have 59.75 here and 64 half. That's basically the next major target above. And at the moment, in order to reach those targets, we still need to see price hold 2404 half. That's a level we've been watching very closely. Even the pre-market report here, was it Tuesday or Wednesday, I mentioned that it's very narrow in here. And if there's any rejection of prices below that range, it could slingshot higher, and that could be the trade. And so that's kind of played out here. And really this morning, pre-market, we had a 4-handle range, not much really to talk about. And in the trading room, there was nothing to talk about with regards to ES until the very end, when price finally broke above 24.17s. At that point, that's when we shifted our focus to a trend day up into 24.24 as the high probability target, and it hit that target and chopped around it. But 24.24 is here, and now you can see we've hit a high into 24.30. So it's been a stop run day to the upside and a very nice continuation so far. 24.05, 24.04 half, that area right there is still very, very important. And price, with it now breaking to the upside, would suggest another major swing move up. Now, very short term, I would say tomorrow, if you want a day trade opportunity, tomorrow, anytime you see a big stop run day up like this, and what I mean by a stop run day, I kind of make up my own terminology, but sometimes. But here it is. You basically have an area where there's clear resistance or support, and beyond that area is where the stops are. And on the days where you see a run of those stops, a stop run day, you typically see the midpoint of that day be at or just beyond where the stops come out. So it can be a trend day where that can play out. And I talk about that very often in the trading room and also in our pre-market reports. But it's the next day, so that's one day. On day two after trend day, one clear trade opportunity that a lot of bears like to do is look to trap above the high. So if there's any push beyond the high, and overnight trading, after hours trading, pre-market, and if there's a failure of that high, right, that trap can lead you right back to the midpoint of the previous session's range. That could be a quick trade into that zone. So that's a quick day trade, rejection or a trap of the previous session's high for a quick return back to the mid. That's a trade opportunity you can look for tomorrow or tonight, even after hours. And any return into 24.20 would provide bulls an opportunity then to defend and look to push this thing back up. So they're going to come in and look to defend that edge and try to push it back to highs and try to extend this even further to the upside. So right now I think that ES remains highly bullish. Nothing's really been slowing it down. At some point we will see rejection, but at this moment 2400 is basically the major pivot right now. 2400, right? We could dance around up here, and if this thing keeps failing to push to new highs, then we'd be looking for perhaps the stops to come out below there. But until 2400 gives out, I think everything, when you see a counter trend pullback, it's a swing buy not right now. And the next upside target is going to be 24.59.75. So a little bit more upside here out of the ES. Here's a look at the NQ. Now the NQ, we had a lot of good talk about the NQ last time. This is case in point right now. Let's take you back right here, because this is where we were. The last time we talked about it was right here on 5/1. That's this day. That was a stop run day. You see how the highs are right here, and then price pushes through those highs, and the midpoint, that dot is right at those highs, half the days above it and half the days below it, stop run day. So what I mentioned that day in the monthly outlook is that any return to 5,600 is an opportunity for bulls to buy it, and then stretch this thing into 5,650. I said that was going to be the short-term trade for the week, and it worked out perfectly. The low came in right at about 5,602. Price rallies into 5,650 and then some, and it was a great trade with minimal adverse excursion, and it was just a short-term trade. This is the same type of deal that I'm talking about with the ES right now. After you see this type of stop run day, Typically speaking, you're going to see bears come in and try to trap above the high and return it to the mid. In this case, it was a 2-day trade. Oftentimes you see that in the morning. Just one morning, 1 hour, it can happen very quickly. Then when price comes over here, bulls are looking to come in and be responsive participants to the trend here and look to push this thing back up. And that's what happened. So that played out very nicely. Now, what I also mentioned was we could be looking at a larger swing move back into 5,500. So I said, look for this thing to go up off the 56, but then we may see some sort of reaction that leads us back down toward 5,500 right here. Those previous highs where we broke out, and I said any pullback of that nature leads to a new high. And so again, this was all based off of how the market was behaving, the current structure, price structure of the market. The market's been trending up, so pullbacks are buying opportunities, and understanding what to anticipate, what to expect, and being able to anticipate what to expect so that you can execute. And so, again, this is kind of what I talked about with the ES. Since you had this type of day, you're expecting this type of move. That doesn't mean it always happens. That's just the primary trade idea for bears at that moment. And the primary trade idea for bulls at the moment is to defend here. And since this thing has been going that way, the idea is that these bulls will win out. So that's just the idea. And the same thing here. If this was a counter trend rotation, this is very similar to the Tesla LVN at 290. It was the same thing. This 5,500 was like the Tesla 290. Coming into that area provided an opportunity for bulls to defend the LVN and squeeze to new highs. So this was fantastic right here, how it's played out. The thing that I've been talking about here lately has been the 57.27 key level. That's going to be the level to watch because it's the recent impulse high with that sell-off low. This is the midpoint here. We've blown through that target, through that zone into the 50% target. And whenever that happens very quickly, that tells you right there that bulls have gotten paid all the way up. So when that price pulls back, there's a tendency for bulls to defend and put some money back to work, those profits back to work, and then you see another continuation toward the final destination. That's going to be 59.04. So short term, I think any push into this 57.27 could be a great buying opportunity for bulls looking to defend and squeeze into 59.04. So that could be a move of about 180 handles into that target on a short-term basis. Given the uptrending market, you have a nice stacked and sloped, so the trigger zone is there. You also have higher value with the pivot range, higher value relationship. That's straight from my book, Secrets of a PivotBoss. So a lot of great things here to look out for. But again, got to be patient to see if a rotation occurs. If so, that could be a great end for a continuation up. Now, I'll be honest, crude oil, this one's turned into a mess after our recent rally and from our recent call. This was fantastic. This, and you'll notice me in the trading room, you'll notice me in the pre-market reports when an actionable trade opportunity is right there. That's when I start pounding the table about it. Other times, I'm just like, hey, this isn't a great spot to be active. Let's wait a little bit better, for better trade location or a better reaction. This was significant when it happened. This was when price dropped over 2 handles to the downside and then recovered 2+ handles before 3 or 4 a.m. that day, Central. It had already shown the rejection before most traders were even engaging it here in the U.S. By the end of the day, it was much, much higher. And that morning is when I mentioned this is likely the rejection low. That's likely the low. 43.76, likely the low. This is likely the impulse sell-off high. And so, typically speaking, you're going to come back and seal that midpoint so that you have a nice key range to work off of. And so we were looking for a rally at the very least in the 48.75. We called out 49.20 and then 50.20 as the next upside target, something like that. And so we had that target range. And from this rejection low, you see price rally right into that zone. It tried to hold above it for a little bit. It's now working down. So that was great movement off of our rejection zone down there. Great continuation. If you want to check out the video, I can point you to that video after the session here. Basically, that video is at the PivotBoss website where I put it out there, so you can see what we talked about in the trading room that day, and at the end you'll see how this thing played out. But a very solid move. Now right now, we've seen every time price gets into the 53s, it rotates back down. Gets into 53s, rotates back down. This one got into 52 evens and is now rotating down. The one thing we talked about this morning was the fact that price, this morning's high, was right at the previous session's low from 2 days ago, after price went offered through that level. So that gave us an indication that bears have the upper hand. Additionally, price was holding right at the previous week's low, and that brought in some bulls into the market at that area, and those bulls eventually got some sell stops run. So at the moment, right here, 49.20 being the high, that's a zone that to look to defend or trap above that area for a continuation. 46.69 could be the next one. So last time we talked about, we were right here. I think this was the first trading day of May. I mentioned we could see a drop in the 47s, and any drop would offer an opportunity to bring it back toward 52, 53. So the move, counter move, has played out. Now, I think 49.20 holding as resistance opens up a continuation down toward 46.69, maybe even all the way back toward 45.43. But I'll be honest, this one is not super fluid and actionable compared to what we've seen before. It's been chopping around composite VPOC, which is 49.76, and so there's a tendency sometimes to chop below it, chop above it, chop below it, chop above it, as this thing trades around balance around that value. So any failure to hold 49.20 opens up a rotation right back up the range here toward 52s and continue chopping in the zone. So this one's not as actionable as what we've seen, but short-term indications seem to imply weakness down below, at least for another leg. But again, when we're chopping around VPOC, it's not the best opportunity. So got to be careful with crude oil right now. Maybe a better pattern or something will develop here soon. Let's take a look here at gold futures. One thing we mentioned with gold last time was that there would likely be weakness ahead because the 1263s were starting to go offered here. And I mentioned how bulls had defended for a week prior, but pre-market we were rejecting those previous highs, and that likely leads to a stop run day. We got it. Again, here's the stop run day where the stops are here. There's the midpoint. Half the day's above it, half the day's below it. That's a huge day. And so I mentioned that that break below 63s opens up a move to 1240 and perhaps below it. And then below 1240, we were looking for a trap and perhaps a reversal, a bounce back up, back toward 1263s. And it got a little lower than that before it finally did it. But again, it's the classic, what you see over and over. You see the stops come out in a move, then you see the counter move back up. And this one played out really, really nicely. So many of the things we talked about last time played out to various degrees, very nicely off of these key levels. Some were a little lazy, but for the most part, still in the range. You know, we have this wider range that's been playing out. This one really doesn't have many clear levels to play off of at the moment because we're not at an edge. We're trading again around composite VPOC. We're not down here. We're not up here. We're not down here or here. We're not at one of those clear, distinct, edges of the zone. And it may not even have to be way out here as long as we're not around the middle, somewhere out. So this one I think may have more upside toward 1280 first, but maybe even into 1300. And then a failure up here may bring price back toward composite VPOC, currently 1259. So I still believe that as long as 1260 holds here, we have a shot to push a little bit higher. This could bring us into 1300. That could then offer a fade opportunity back toward value, maybe even a little bit lower into 1229s. But I think this thing is going to continue to play out for a little bit until something more significant happens. So that's a look at gold. I did want to show silver really quickly because this is something I talked about in the trading room earlier, and I mentioned that I wanted to see how this thing finished the day because it looks like a tremendous buying opportunity. And so this is one silver that actually looks fairly good for an actionable opportunity now. What you have here is basically a similar range to gold. We have a nice rejection off of 16s, price pushes up, stop run here, so when it comes back they defend it, another push and hold. And so you have higher lows, you have higher highs, you have this nice channel going. And earlier I saw this 17 right here, and price had hit off of it and was sitting right around the mid of the day. So it looked like it was still red like this and had a little tail here. And what I mentioned was that this looks like a good opportunity where this is looking like a rejection. You have a change of bias that could be starting now with the PIMAs. This could offer another squeeze opportunity up here toward 18s on a short-term basis and perhaps as high as 1850. So if we quantify that now, so quantifying that really quickly, from that low, if this remains the low of the month, that green right there tells us about 1698.5. If you forecast higher, 75% of average range over the last 10 months, you're going to get 1835.5. If you forecast from this low, 100% of average monthly range over the last 10 months, you're going to get 1881. So that is your high probability target zone by the end of June, based off of this idea. It may not be a straight shot, but I think the first idea, the first move, would be watching for a retest entry back toward 1715s. Let me see what that level is. The top of the pivot range about 1712. The mid is 1717. So anywhere in that area could provide an opportunity for bulls to defend and look to squeeze this into about 1780 to 18 on the first wave. And then from there, you may be able to add back and defend or hold. You know, scale out a half, something like that, and hold until you see higher targets. So this one looks like it has some good potential to push higher. This is silver, and something that we were watching in the trading room today, so I wanted to pull this out and talk about it a little bit here. But this is the key level. Below 17s right here breaks the deal. So if this thing starts to do this and, you know, gets down here, I mean, that's pretty much it. That's the pivot to play off of as this thing attempts to push higher. So those are a few futures contracts that I wanted to talk about. I also had quite a list here of, let's see, stocks on this other end. Let's look at Starbucks is one we talked about last time, but it was right ahead of our rejection day that was talked about in our room. Traders in our room have had an eye on Starbucks for a while. One thing that was fantastic was these 59s here. When we saw it over here, I mentioned that this could be an opportunity to bring it down just because of the gap here in the rejection off the zone. I mentioned there could be an opportunity here to see this thing come back this way. But as price kind of came into that level, there was a rejection day here. That rejection day was clearly sealing the 59s, which were prior resistance into support. And we flipped our tune there. And since that day, it's been a straight shot up. And so, again, I think I mentioned this last time in our monthly outlook. I'm always so grateful for the traders in our room because, you know, they bring opportunities to the room as well. It's not just me sounding off all the time. They say, hey, I think this is moving, or what do you think about this opportunity? Or hey, I think there's a nice rejection happening in this stock. Check it out. And this was one of them. This was one of them here, brought into the room by one of our traders, and bang. You know, that's when I say, hey, I think this one has some legs. This is how I'd be looking to enter it, and this is the targets we'd be looking for. And you can see this thing plays out really, really nice. So this one turned out great. 62s now an area to defend for bulls. So in pushing through 62s, any counter trend rotation into 62s, perhaps even into the trigger zone of the PIMAs offers an opportunity to push this thing a little bit higher, at least into the next key level up, which is going to be 65.38. So right now, the primary idea would be any counter rotation into 62s offers a squeeze into 65.66. Very, very short term. Here's an opportunity I found today. This one has been trending up. This is Caesars Entertainment. It's been trending up very nicely, but sometimes you don't get a perfect pullback go, pullback go, pullback go. Sometimes it's a lazier trend where you get a push up, hold, push up, hold, push up. And this is that type of market right now where we've gotten that next leg up, big continuation squeeze here, and then you see the thing, see a lot of absorption, digestion of the recent prices, absorption at certain levels, and now you're starting to see a little bit of a break to the upside. And this type of formation usually leads to new highs, so there could be a fantastic swing move ahead. If this is going to be pushing higher here, based off of where the low might be for the month, I don't know if that's the low just yet, but in just kind of thinking that that may be the low, at least for now, you have a great shot at 1250 to 1295 based off of our PivotBoss advanced ADR targets. And so from breaking through this area at 1140, getting the stop run day, a pullback into that zone offers an opportunity to squeeze it right toward 1250. And that could be about an 8% move very, very quickly over the next 3 to 5 days. So we'll see how that plays out. But 3 to 4 weeks down the road, likely you'll see this thing trading around 13 as it remains intact. Now, anytime I'm looking for this type of opportunity, you've got to be able to hold certain levels. So at any time, if price pulls back and can't hold above this trigger zone or above the previous close, that's going to be a problem. But right now, pullbacks have been defended into that area, and until this thing can't hold 1060, I think all pullbacks are going to be controlled by bulls at this time. So that's one to watch out for. HPQ is another one. Again, this one kind of follows our last one in Caesars, where you have a nice trending market here, and on this recent pullback, it kind of held and is holding here. So it's more digestion at the moment, still honoring the edges of the range. So here's 18 to about 1820. Pushed through it, came back and held it. That's kind of like that 290 in Tesla. And the next squeeze could be upon us here pretty soon. So this is one where if it can continue to hold 18s, 1820, we have a shot to see expansion toward about 21s. So it could be a pretty solid move into the lower 20s here pretty soon. STI, this one's a nice one because it forms right at an LVN. So right there, that's about 53s. You can see a significant LVN on the profile. An LVN is a low volume node, and the peaks are high volume nodes. The troughs down here, low volume nodes. That signifies rejection, signifies there's not much volume exchange there. Market participants don't want to do business, so it offers a great opportunity for bulls to defend. And so you can see once price pushes through it, every rotation into or near that area becomes support, and it creates an LVN. You also see a little bit of rounding off behavior here, so sometimes that can lead to a big drop back down. But right now, support areas like this can tend to lead to significant rallies to at least retest the recent highs within the range. So this is one to watch out for. As long as it can hold 53s, the thing has some nice potential. And to show one off that looks similar to this before, let's see. Was it true? Here was one. This is one that looks similar to that last one. This is called TrueCar. And we talked about this in our trading room, and you can see right here there's an LVN. Well, you don't see it right there, but if I squeeze it, you could. But you can see over here how market rejected those prices. That creates an LVN. And this right here was an outside buy candlestick, the outside reversal. The outside, the way I define it in my book Secrets, is this low is below this low and the close is above the high, and the size of the range of that bar is greater than average. And that occurred right at an LVN, and so that was a buy op for, again, I mentioned, right to a retest of highs in the 16 at the very least, and it plows right through that area. So if you want a case in point on the last one, that's exactly what it looked like at the time. I'm not saying it's going to explode like this, but that's the potential if it can hold the LVN. So that was STI. So OHI, this one's another one that had a significant rejection off these lows. This rejection had a significant tail associated with it, so you see kind of a signal there. Here's 30.50. That area had been resistance, it pushed above it, so it's become support every time. The last time, every time it's bounced off this support level, it's had a higher and higher move for the most part. You know, here's this move, it gets up here a little bit higher, it comes back in that a little bit higher, now it's back at it. It may come in and challenge prices into 34 to 35 very quickly over the next month or so. So again, this is, you know, kind of a looking out throughout the rest of the month. This is a strong low, very strong rejection low. And so basing our targets off of this low, for the end of the month, you could easily see a move into these two targets, and that would be about 32.70 to 32.47, 33.47 rather. So that's the target zone. Now the way to look for an entry would be watching the midpoint of this range at about 31. If price rotates into that zone, you may see some absorption occur at or just above or around that area, and that could be an opportunity to bring it back to value. Now again, that's what I love about opportunities like this, when they all start to look the same, the good ones at least. You have a trading range here that's been in play. Clearly you're seeing rejection here, and our goal as traders is to bring price from rejection and return it to acceptance. And in this case, acceptance is sitting right between our high probability target zone, as indicated by our PivotBoss ADR method targets. So based off of this low, that's a high probability target zone. That's right where value is. That gives you good odds that that target can be hit by the end of the month. So this is one to keep in mind as well. And only a couple of more here, and then I can wrap it up. This one's QSR. Very strong trending environment on this one as well, holding LVNs, which is very good. 58, very strong level. The recent pullback also occurred inside the trigger zone. You have a signal here to boot, and so that could provide, again, a great squeeze opportunity to the upside, and you'd be targeting 63.50 to 64.79 as the upside target here on a pullback. Now, any pullback, even as deep as 58s, could still provide a great opportunity, but in this case, you really don't want it getting much below 60.60. So rotations into 60.60, maybe a trap below it could be an opportunity to flip it higher. But really, if price can't hold that level, you got to hold off to 58s. So of all the ones we've done, all of them have been buying opportunities, because this market has been very, very bullish. But I did have a couple of sell-side opportunities here that you can watch. This is IFF, and this one's formed a very clear resistance at about 140. And it's very clear because you can see the volume ledge on the volume profile. You can see visual resistance across the way. Again, resistance doesn't have to be perfect. It's perfect here and here. It was perfect here, but then it pushes through it, and bulls try to make it support here, but they fail on a new high, so it goes offered back below. That's how you know you have a great key level. So 140 is very important, and we have a rejection day here. This is after price had been in an uptrending market. You put in a new high, and then when price got above that high, it was rejected. So in a very short term, we may see this thing rotate back against the current range. And with the range being 140 to about 128, we could be looking at a move at least into the top end of the zone. And again, based off of this high, if we forecast lower, 75 and 100% of average monthly range, we get 131.13 to 128.26. And so that could be a high probability target zone for the month. Keep in mind, we are in an uptrending market. So you always have to know that you're counter trend trading if that's the case. So you have to be very disciplined. You have to be patient about trade location. I always say that the folks that do best with my analysis are those that have had experience in the market, because you know how to execute your bias. You know how to pick your trade location. You know how to manage your risk and scale and those types of things. So you have to definitely be on top of your game when you're fading the counter trend edge of a trending market. So in this case, I think there's still a great shot here. And again, you want to see price hold around the midpoint of the rejection tail and into the previous highs. So the previous highs are about 138.90, and the midpoint is about 136.30, thereabouts. Let's see, 136.60, 138.60. So that's about the zone where if price comes into that area, bears may be looking to defend for a shot at seeing this type of behavior. But you have to be quite careful. And there's no shame in just letting it sometimes break down and then looking to play the pullback or the next lower high. So something like that. But this thing may be able to see a nice rotation across the range soon. And the last one here, this one is Gilead. And I almost didn't bring this one up. It's been severely beaten down. But anytime you have something that's trending like this, it's just hard not to sell it, because there's a high likelihood you're going to see new lows. And in this case, there was prior support all in here, very clear support, and it violated that support recently. It got a push out of this range here and rejected today right at that support, and that's where bears are defending. So right now, that is the edge. It's 65.71. Bears are trying to keep that offered for a shot at new lows. And based off of that pivot high for the month, we can then forecast our target range to the downside, and that would be 131. So 61.31 and 59.85. So based off of this high, by the end of the month, we might be able to see something like this if the trend remains true. So something to keep in mind here with Gilead. Any failure to hold that pivot there, 65.71, negates this entire thing. And at that point, this thing is squeezing back to the prior high at 69. So right now, these are bears that are positioned below support. And based off of today's rejection of that prior pivot, you may see some stops start to come out below 64s. So something to watch out for here in Gilead. Now, if you wanted to go check out the PivotBoss website here, go to pivotboss.com and click on News. If you wanted to look more at last month's Tesla analysis, or want to look at last month's outlook in general, you can click that link right there. This is the PivotBoss monthly outlook from last time. I always suggest going back and replaying it. I even do, just because I want to know how my analysis played out, and helps me sharpen my analysis for certain markets. And a lot of great gems in there. This is the Tesla analysis pulled out into 3 minutes, so you can see that. The other thing here, I mentioned this earlier, but you can click on search box up here and type in crude, and click on search, and it'll do a quick search for crude. And right here in our premium replay, the analysis behind our recent crude oil swing recommendation, you can click on that link right there, and it will bring up the analysis that I provided for that swing move. So this move right here, where I talked about this rejection, the video below this chart shows what I was talking about the morning that this bar was playing out, and I gave you how I found this targets. And it's basically the exact same thing that we did here today, but basically looking off this low and finding the target zone and those types of things. So if you want to go back and check that out, it's right there at the search box. Just type in crude, it'll be the first one. So you click on that analysis. It's about 10 minutes of analysis, so you'll be able to see how I did that. All right, everyone, thanks a lot for hanging out for the June monthly outlook, I'll get this thing recorded and sent out for you as soon as I can, and I'll post a tweet and email it as well. So thank you all for joining me today, and we'll be back at it again tomorrow morning in the trading room. Thanks everyone, take care, and I'll see you soon.